Alright, for this video I want to go through the Schedule 8812 for the child tax credit, and specifically we want to look at a scenario where taxpayers are claiming the child tax credit, but they also have other credits claimed that cause a reduction in their CTC amount. So in our fact pattern here, we're going to have a married couple with 3 kids that want to claim the CTC, but on their return they are also claiming a clean vehicle credit for a new electric vehicle purchase. So they purchased a new electric vehicle during the year, which makes them eligible for a $7,500 credit. So now the question is, if we're claiming this credit, how does it impact, how does it limit the amount of child tax credit that we might be able to claim on our return? So we've got the full Form 1040 and the 8812 there, and then I've got one slide here covering some background on the CTC and how the other non-refundable credits impact that calculation. So the child tax credit for 2023 is $2,000 per child under 17 at the end of the year. Right now, the refundable portion, referred to as the ACTC, is $1,600 for 2023, which is up from $1,500 last year. But this is currently trying to be changed in Congress, right? So there's a bill circulating right now to try to increase that to $1,800. Now, what are the issues with the child tax credit and other non-refundable credits? So other non-refundable credits are reported on Schedule 3 of your Form 1040. So if I jump to that really quickly here so I can show you what I'm talking about. The Schedule 3 Form 1040 for additional credits and payments. In Part 1 here for the non-refundable credits, if you have other credits that are being claimed here, and it's only certain line items, then you might have to reduce the amount of child tax credit that you can claim on your return. And that's what we're going to see in this example here. And so some of those credits that you have to reduce your liability for before factoring in the CTC are things like the foreign tax credit, dependent care credits, education credits, if you make energy efficient home improvements and file a 5695, and lastly but not least, the 8936 for that clean energy tax credit for electric vehicles. So in our fact pattern here, let's say we have John and Jane taxpayer, they're married and they're filing a joint return. Now they have 3 children, all under 17, so they're all going to be qualifying children for the child tax credit, and that's $2,000 per child. Now in July, they bought a brand new 2023 Chevy Bolt, and the Bolt is eligible for that $7,500 of clean vehicle credit. Now, their total taxable income is $71,253, and their total tax liability is $79,015. So if we look quickly at their return here, we've got their total taxable income down here on line 15, $71,253. And their total tax on line 18, $7,915. This is their tax liability on that income before factoring in any of those credits. All right. Now, because their tax liability exceeds the EV credit, they're going to get a full $7,500 credit against that tax liability. And so that's going to lower that tax liability down to $415. So now they're at $415 before factoring in how much of a child tax credit they can claim, right? So what we're going to see when we look at the return is they're eligible for the full $6,000, but they're not going to be able to get all of it, right? And that's because the non-refundable portion was reduced by that EV credit. All right, and so let's have a look at the return and see how all this kind of meshes together. So if we're starting with the 8812 here, in Part 1, Line 1, we have our adjusted gross income of $98,953, and that's coming through from line 11 on page 1 of the 1040. Now, number of qualifying children under 17, we've got 3, and so that makes us initially eligible for a $6,000 child tax credit. Now our filing status, the threshold for married filing joint is $400K. So if we made more than $400K, we would have to start to phase out this $6,000 amount. In our case, our $98,000 AGI is well below, so we don't have to worry about any phase outs reported on lines 10 or 11. Now on line 12 it asks, is the amount on line 8 more than the amount on line 11? And the answer is yes, right? 6,000 is more than 0, so we subtract line 11 from line 8 and report the difference of $6,000 there. Now we have to move on to the credit limit worksheet A. Right, and this is where we start to see the reduction. So if we look at the credit limit worksheet A, the amount of tax, line 1 as our starting point, so line 18 of Form 1040, there's that $7,915 figure. So line 18, 1040 is $7,915. That's the starting point for our credit limit worksheet. Now, notice we've got to add or include the following amounts here from Schedule 3, and then we subtract it from our tax balance. So we've got a number of line items, right? Schedule 3, line 1 is the foreign tax credit. And down here on Schedule 3, line 6F is that $7,500 EV credit. So Part 1, line 6F is the clean vehicle credit, and we've attached the $8,936. So we've got the $7,500 accounted for. Now our net amount available for the non-refundable CTC is reduced to $415. Now there is a prompt here, right? We would have to complete worksheet B if we were claiming any of these credits, but we're not, right? We're not claiming the mortgage interest credit, no adoption, no clean energy credits, and no first-time home buyer issues, and no foreign earned income exclusion on the 2555. So 415 is what we've got here. And so this is the amount that's entered on the 8812 line 13. So if I go back to 8812, line 13 is $415. So on line 14 at the bottom, it asks us enter the smaller of line 12 or line 13. So we've got our $6,000 credit there, but the smaller amount because of the credit limit worksheet is $415. So the amount of child tax credit that we can claim is $415. So we go back to page 2, we report $415 on line 19. And so now with the $7,915 of tax as a starting point, we've reduced it by the CTC of $415, the $7,500 of the EV credit. So our total taxes owed based on this taxable income is 0, right? We've eliminated all of it because of the credits. Now, with the CTC, we're not done yet, right? Because the CTC has that additional child tax credit, which is the refundable portion. So we move on to Part 2A, where we calculate the ACTC amount, if any, that we could claim, right? So line 16A, it asks us, go back to page 1 and subtract line 14 from line 12. So we go back up here, we subtract line 14 from line 12. So $6,000 of eligible credit for the child tax credit. We used $415, so that means we have $5,585 remaining, right? That's the maximum amount that we could potentially get before factoring in any of these limitations. Now, the number of qualifying children under 17, we've got 3. 3 times $1,600, that's the refundable cap, leaves us with $4,800. Now, remember, this is something Congress is trying to change, right? They're trying to increase this to $1,800 per child. So we got $4,800. We go over to the earned income worksheet here. So we've got line 18A, $95,000 of W-2 earned income. Line 19, we subtract that amount from $2,500 and then multiply it by 15% to get this result here. Now this is also trying to be changed as well under the new bill, right? They're trying to get this same calculation, but you would take the $13,874 and then you would multiply it by the number of qualifying children. But when everything is said and done here, what we see is, so on line 20, it's asking us multiply by 15%, sure. On line 16B, is the amount $4,800 or more? The answer is yes. Now, if line 20 is equal to or more than 17, skip part 2 and enter the amount from line 17. Otherwise, go to line 21. right? So in this scenario here, the limit that we're going to have is the $4,800. So we ultimately report the $4,800 down here on line 27, and this is the amount of our additional child tax credit. This is the refundable portion. So we have the $4,800. That's reported on page 2 of the 1040 on line 28. So here we have the additional child tax credit from the 8812, $4,800. So now if we step back and kind of look at this, how much of that credit do we actually get? Well, we got the $415 up there. We got that as a non-refundable credit. And then we've got $4,800 of ACTC there. So of the $6,000 in child tax credits that we were initially eligible for, we were able to get the benefit of $5,215. So there was a little bit left over, right? So $785 of the CTC is effectively lost because of these limitations. So if you did not have that electric vehicle credit, then you would have just had the full $6,000 up here, right? So you would have gotten the full benefit of the $6,000 of CTC. But in this case, because we've got some other non-refundable credits, we have to account for those kind of limitations. All right, so that covers it for this video. I hope that was helpful. If you have any questions, feel free to leave a comment below, and I look forward to seeing you on the next video. Thank you.